Stop scrolling. That passive income dream gurus are selling? It's not just fake, it's costing you real money. For years, gurus have sold the set it and forget it dream. Financial freedom with minimal effort, laptops on beaches, money magically flowing. It's seductive, appealing, and for most, a total fantasy. The truth about passive income is less glamorous, but infinitely more powerful because it actually works. Today, we're busting serious myths, revealing what passive income really is, how to build it, and how you can start today. Myth number 1, passive income means doing nothing. This is the biggest lie. The idea you can flip a switch and money pours in with zero effort is actively costing you success and disappointment. Real passive income, the kind that actually builds wealth, always demands one of two things: significant upfront capital or significant upfront work. Often it's both. Take real estate. A rental property can be a fantastic source of passive income, but first, you need a substantial down payment, closing costs, and potential renovations. Then, unless you hire a property manager, you're handling tenants, maintenance, leases, and emergencies. Even with a manager, you're still reviewing statements and making strategic decisions. It requires significant capital and ongoing oversight, far from zero effort. The same goes for digital products, an online course or ebook. I once spent 6 solid months, evenings and weekends, building a comprehensive financial planning course, outlining, scripting, recording, editing, building the platform, and marketing. Yes, it now generates income while I sleep, but that's a direct result of hundreds of hours of active, upfront work. It still requires occasional updates, marketing, and customer support. It's leverage, not idleness. But here's the harsh reality most gurus ignore. The term passive refers to the ongoing effort, not the initial effort. If someone tells you they have a truly passive income stream that required no money and no work to set up, they're either lying, selling you something equally false, or they've stumbled upon a lottery ticket. Myth number 2, you need to be rich to start earning passive income. This myth stops countless people from even trying. It implies you need a pile of cash to participate in wealth-building strategies. Simply untrue. While capital accelerates the process, time and consistency are equally, if not more, powerful, especially with the magic of compounding. Consider dividend investing. Yes, if you want to live off dividends today, you need millions invested. But you don't start there. You start with what you have. Invest just $100 a month into an S&P 500 index fund, which historically averages around a 10% annual return, and consistently reinvest those dividends, and you'd accumulate over $63,000 in 20 years. That's purely from consistency and compounding. Most of that growth, especially in the later years, comes from your earnings, earning more earnings, which is the very definition of passive income. You can start small. Micro-investing apps allow you to invest spare change. Buying fractional shares means you don't need hundreds of dollars to own a piece of a blue-chip stock. High-yield savings accounts, while not offering huge returns, are completely passive and require no initial effort beyond opening the account and depositing funds. Even peer-to-peer lending platforms let you start with as little as $25. The key is to start now with what you have, not to wait until you magically become rich. Myth number 3, all passive income is tax-free or low tax. Before we dive into how to start, you need to understand this next critical mistake. The moment you start generating income, the tax man comes calling. There's no magic loophole just because the income is passive. In fact, depending on the source, passive income can add its own set of tax complexities. Let's look at dividends again. Qualified dividends are taxed at lower capital gains rates, 0%, 15%, or 20%, while ordinary dividends hit your regular income tax rate, often much higher. Rental income is taxable, but you can often deduct expenses like mortgage interest, property taxes, and depreciation. Good record keeping is key. Royalties from a book or music, taxable. Interest from a high-yield savings account, taxable. Accumulating money without paying your fair share in taxes is a pipe dream. Smart passive income earners understand the tax implications of each stream and plan accordingly, often consulting with tax professionals. Ignoring taxes leads to nasty surprises and significantly erodes your passive gains. Financial literacy, especially around tax law, is essential. The truth revealed, what passive income actually is. So if all the gurus are wrong, what actually works? Passive income is simply income generated with minimal ongoing effort after a significant initial investment of either time, money, or both, designed to leverage an asset. It boils down to these core principles. 1. Automation. Once set up, the system runs on its own or with minimal intervention. 2. Scalability. The ability to generate more income without proportionally increasing your workload. 3. Asset ownership. You own something tangible, real estate, stocks, or intellectual, a course, software, content that generates revenue. Here are passive income ideas that actually work, without the fluff. Dividend stock investing. Build a portfolio of dividend-paying stocks or ETFs. It takes consistent investment, but once established, dividends land in your account passively. You own profitable businesses. Real estate investment trusts, REITs. No capital or desire to be a landlord? REITs let you invest in diversified real estate portfolios. They pay out a significant portion of income as dividends, a hands-off way into real estate. High-yield savings accounts and certificates of deposit, CDs. While returns are modest, they are truly set it and forget it once your money is deposited. Safe, liquid, and completely passive. Creating digital products, e.g. ebooks, online courses, stock photos, videos. This is the high upfront work, low ongoing effort category. Once created and marketed, these assets can sell for years, generating income without you actively exchanging time for money for each sale. Peer-to-peer lending. Platforms that connect borrowers directly with lenders. You lend small amounts and in return receive interest payments. It requires some initial research and risk assessment, but is passive once funds are deployed. Be warned, this is higher risk. The common thread among these truly passive income streams is that they require a foundational effort or capital investment. They are not get-rich-quick schemes. They are build wealth, slowly and surely strategies. So how can you start building true passive income today? First, pick one area. Don't try to do everything at once. Are you comfortable with stock market volatility? Look into dividend investing or REITs. Do you have a skill or expertise you could package? Start outlining it. Have emergency savings just sitting there? Move it to a high-yield account. The most important step is to educate yourself on the specifics, understand the risks, and then take action. Start small, stay consistent, and automate your investments or savings as much as possible. This isn't about magical money. It's about smart financial planning and leveraging your resources effectively. This video is for educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor before making financial decisions. If you're ready to ditch the passive income myths and start building real wealth, hit that like button. And tell me in the comments below, which passive income stream are you going to focus on first?